Hi, Courtney Smith here, and I want to talk about deflation and how to make money from the market. First of all, I don't personally think that we're going to see deflation in the marketplace, but the market thinks that we're going to see deflation. And whatever the market thinks is far more important than what I think, because in any battle between the market and me, I know who wins. The market does. So right now, the market believes that deflation is coming for a couple of reasons. Number one, I've talked about in previous videos, the money multiplier. And the money multiplier tells how often a dollar turns over in our society. Right now, that's less than 1. That means that people are not actually, when they receive money, they're not spending it, they're paying down debt, and they're saving money rather than spending money. This is something that I have not seen in my lifetime. It has not been seen since we started keeping these records. Probably we saw a money multiplier below 0 in the Great Depression, but we did not keep those records back then, so we don't know for sure. But the point anyway is that people are holding on to money and paying down debt. Now, the federal government and the state governments are spending like drunken sailors on shore leave, but that's a whole other matter. The normal people, the corporations, they are saving money. They are increasing their liquidity and making their balance sheet more stable. So that's a big factor that can lead to deflation. Another factor is the debt that's out there. There's still a tremendous amount of housing debt, but more importantly, there's a huge amount of government debt. Everybody sees the headlines every day about the federal government debt, but most countries around the world are also suffering from mammoth record-setting debt. England, France, Germany, China. China perhaps has the second largest amount of bad debt in the world today, maybe number 1. And the problem, too, is that we don't really know how much debt there is. We know that, for example, Greece lied about the amount of debt that they had for decades, and we suspect that other European governments are doing the same. So that debt could collapse and cause a deflation. Now, right now, inflation is still about 1% per year, so we don't really have to worry about deflation quite yet, but that's what the market is focusing on. How do we make money in a deflation? Number one, treasury bonds. Treasury bonds of good credits like the United States, Germany, England, Japan. These are the types of instruments that you want to buy. They're in a bull market right now. We might see interest rates, long-term interest rates, move another 100 or 200 basis points. That's 1 or 2% more, which would be a hugely profitable trade. You can buy that through things like the TLT ETF, or you can buy the T-note futures. You can buy the T-notes or T-bonds for your account and put them in the bank. So that's the number one way to make money in a deflation, is to buy long bonds of superior credit. Another way is to look at buying things which are interest rate related. That would include things like utilities. So utility stocks should do very, very well. As interest rates go lower, the stocks of utility companies will go up. In addition, look at other interest-bearing things like preferred stocks as a way of getting involved in a deflation. Just make sure that those are of very high credit qualities. Don't be looking at junk bonds during this situation. Another thing that does quite well is gold. Oddly enough, gold does quite well in a deflationary environment, but all other commodities will collapse. So things like copper, the grains, crude oil, all of these things should be in bear markets in a deflation. It also means you can do things like buy gold and sell silver. That spread is a low-risk way of playing the deflationary card. Those are things that are not going to do well. Now, personally, I don't think we're going to see deflation. I ascribe a significant minority chance to that occurring, because I believe that central banks will create the easiest monetary policy that we've seen since World War II. In fact, I'd probably have to go back into the 1920s to see this type of inflationary central bank activity. And I think that central bank activity is going to overwhelm the deflationary forces, and down the road we're going to see much higher inflation. Governments owe most of the money that's out there. How are they going to pay it back? They're not going to cut spending. They're going to try to raise taxes, but you can't squeeze blood out of a stone. So what that means then is that the way they're really going to get rid of that debt is to inflate it into nothingness. If they can get inflation higher, then the value of that debt will collapse and they will pay off less. So right now, we need to be trading our stocks, futures, Forex, as if we are in a deflationary environment or the threat of a deflationary environment. The main reason is because there is a chance we will go into deflation, but more importantly, that's what the market thinks is going to happen. We then have to keep our eyes very closely peeled to start looking for signs of inflation because of the massive quantitative easing by central banks around the world. Talk to you later.